Hey guys, welcome to another video and thanks for clicking on this one. In this video, I want to share with you what has been going on in the stock market. In the past couple of weeks, it's been very volatile. We wake up in the morning, start the day in the green when the market opens, and then somewhere down the line, it turns really red and we end up with a day on the downside. And then the following day, we repeat this pattern again. Think it was only this Friday that just passed that we saw a very green day, even though we started the day somewhat green, turned red, and then only for it to turn green again. Now, on days like this, I ask myself, what should I be doing? Should I be worried? Should I be selling or should I be buying? I ask myself those three questions, okay? And I'm going to repeat that. Should I be worried? Should I be buying or should I be selling? When you ask yourself these questions, it puts you in an objective mindset. And I think that is something that I want you to keep in mind as we go into the coming weeks as well, because we don't know what exactly would happen in the coming weeks. We might get this correction continuing into the weeks to come, or we might just see a bull run again. We don't know. But one thing that I want to share with you is that when you are investing, or if you are investing, which I recommend that you do, then you should be looking at the long term. Now, before we get into that, let me share with you what has happened in the past couple of weeks. Okay, the Dow Jones in the past 5 days is only up 0.89%. The S&P in the past 5 days is down 0.75%. The Nasdaq in the past 5 days is down 2.89%. Ouch, that hurts. Now, if we go back to Dow Jones for the month, okay, it's down 1.31%. We go to S&P 500 for the past 1 month, it's down 0.67%. And the Nasdaq for the past 1 month is down 2.81%. That is a lot of drops, or downside, or red, in my opinion, depending on how you look at it, because the market has just not been doing so well. And we can attribute this to a lot of reasons. One is inflation is still a thing, okay, but then two, we have the tariffs that is being imposed, on different countries, and all of that is poking the stock market. Now, one thing that we always need to keep in mind is that yes, these tariffs will come and go. We would all adjust. The stock market will always find a way to adapt to the situation that we find ourselves in. And that's something that you always want to take away. Because as we invest, or as investors, you're asking yourself the question, where else would your money work better? Real estate right now isn't a great place to put your money because of high interest rates, unless you find extremely great deals, and those are rare to come by. Gold is another one that people are talking about, but gold is not necessarily an investment. It's just a store of value, which means if you put your money into it, you don't get anything in return other than price appreciation, and you hope that it goes up within the time that you put your money into it. Putting your money in savings or in cash is literally burning money away due to inflation. And that means that where else would you put your money? Cryptocurrencies, as we know, cryptocurrency itself is also down for the past couple of weeks as well. Bitcoin dropped below $80,000 in the last week, and we don't know what is likely to happen in the coming week as well. And that is why, as you invest, you want to always have an objective goal in mind. Now, here are some things that I want you to take away from this video. The first thing that you want to take away is that if you've saved enough for your emergency fund, then that is like your insurance, right? In case something goes wrong, you have some money to fall back on. The next thing is you have your long-term investments in things that are long-term. For example, index funds, mutual funds, ETFs, where your money is consistently invested every week, every month, every 2 weeks, whatever works for you. You want to make sure that you're consistently putting your money into such investments. And then we can then talk about maybe short-term savings. When I say short-term savings, I'm not referring to your I'm not talking about your emergency fund, but I'm talking about short-term savings like investment in a brokerage account. This is where you are trying to buy and sell. Maybe you're swing trading, maybe day trading if you are able, and maybe you are somewhat of a in between a long-term and a short-term investor where you're buying and selling occasionally. This is where you need to be careful, because if you are buying stocks or individual stocks in this time, you have to make sure you're buying solid companies, and these are companies you're willing to hold for a long term. Because if you are holding them for a short term, in the interim, we don't know what's likely to happen in the next week, in the next 2 weeks, because of the political environment we find ourselves and the environments that we find ourselves in terms of inflation and in terms of the economy. According to the report right now, the United States will have a negative GDP in the next report. There is a lot of uncertainties that are surrounding the stock market, and when it comes to the stock market, we don't like situations that are unpredictable. The stock market likes something that is predictable, and that's what it is based off on. Okay, so the point here is make sure that whatever you're doing it for the long term. That would be your safest bet, other than if you are trying to just time the market, which is always, difficult to do. You never know when the market will turn on you.